Hello traders and investors, welcome back to the Trend Trader channel. In today's video, I want us to look at the ETF that Satrix is going to be launching soon. There have been communications around this ETF. The ETF is not listed yet. It's still in the part where people can express their interest, meaning that you can buy the letters of allocation, and then the ETF is going to be listed in the GSE on the 26th of May 2022. So today, in today's video, I just want us to go through the information that we have received either from Easy Equities or Satrix, or information that we've been seeing that it's been flowing on social media covering this ETF. If you are an Easy Equities user, you should have received this email from Satrix. As you can see, the email was sent a couple of weeks ago. They were talking that they were launching this brand new ETF. So this ETF is going to be covering the healthcare sector. But we will go through the bits and pieces that explains the technicalities of this ETF. But as I said, that in order to participate, you need to buy now those letters of allocation. Each letter of allocation, it costs about R1 that represent a 1 letter of allocation. Then once they have consolidated all that information, then they are going to decide how much of those ETF each person is going to get based on the number of people that subscribed or that subscribe to the IPO. Speaking of subscription, if you haven't subscribed to the Trend Trader channel, please consider subscribing. Your subscription, it helps us, it helps the channel to grow. It also motivates us to continue to create a financial literacy related content which involves trading or investing. So if you haven't subscribed, please consider subscribing. And if you find value in this video, please consider liking this video and sharing this video with as many people as you can. Okay. So as we know, usually whenever Easy Equities comes up with a new IPO from any of the ETF providers, usually they do not charge their investors brokerage fees. Even with this ETF, it's going to be the same story. As you can see there from the screen, it tells you that you need to make sure that you stake your claim before 16 May 2022. In order for you to participate, you're gonna find this either in your Easy Equity South African Rand account or the TFSA account under new listing, right? So you need to make sure that that is done. You have your letter of allotment there. But just to quickly go through, there's this communication. If you go to the Satrix website, you're going to find this communication that talks about the IPO of the Satrix Healthcare Innovation ETF. And then when you look at this information, you can already see that they have published a brochure and a presentation which covers information for this. But the most important thing are the date that they have specified for this thing. Remember that they came up with the announcement on the 4th of May. That was the time that they brought this ETF into conversation. Then the closing date to participate, meaning the date where you should have bought your letter of allotment, is the 16th of May. We are still on the 11th of May, so there's still a bit of time for you to buy yourself or those letters of allotment if you haven't done so. Then on the 19th of May, they are going to settle these letters and then allocate the number of units to the people. Then on the 26th of May, that is when that the listing of the ETF is going to be there in the Johannesburg Security Exchange, meaning that if you didn't buy the letter of allotment as from the 26th of May, you can log into your account, whichever stock brokerage account, as long as they have the Satrix Healthcare Innovation ETF, then you'll be able to buy that ETF even though you wouldn't have participated in this. But remember, if you participate in the launch of the IPO, you won't be paying brokerage fees. Right, now that we have covered that, let's see what the brochure is just simple. It's like a stock exchange, a new service that covered what was discussed previously. But if you go and look at the presentation, it's a bit it covers a lot of things. There are things that I would like to share with you, so that whenever you buy this ETF, at least you are making an informed decision. So as we are looking at this presentation that they've presented. Remember, the ETF provider is Satrix in this case, so they also specify the date that they have made the announcement on the 3rd of May, and then the opening date was the 4th of May to buy those letters of allotment, and then the listing date is going to be the 26th of May 2022. And then there's some information that you can go through there. I've already mentioned that it's covered by Satrix, and then the participating broker is equities. Remember, it's First World Trader, but it's trading is equities. But after the 26th of May, you can buy this ETF either on is equities account or Satrix account or any other broker, as long as these ETFs are available in that broker that you are using. You will be able to buy these ETFs. Once again, they open by presenting the salient date or the date that you need to know, which were the cents and the date of opening this letter of allotment. There's this thing that they call up the ramp up period. This is the date whereby once the broker or the fund manager, in this case is Satrix, they have received those letter of allotment, or they've received that funding from potential investors. They are going to take that money and start buying the ETF. Remember, we'll cover what it means since it's a feeder fund. We'll explain that. So the ramp up period covers the period whereby the fund manager will be buying the underlying funds, right? And then from the 19th of May, that is when they will settle those letter of allocation, and then from there on the 26th of May, then it's going to start trading in the JSE once again, right? And then they say that one letter of allocation will be issued for each and every rand a subscription, meaning that if you put in 10 rand for this, you're going to get 10 letters. But that doesn't mean that that's the number of units that you'll be getting. The number of units that you will get will be determined once the net asset value of the ETF has been determined. So let's say, for example, you put in 50 rand, that means that you are getting 50 letters of allocation. If the net asset value of that ETF ends up being 25 rand per ETF, it means that you will only be receiving 2 units. So don't confuse that one letter of allocation with the net asset value of the ETF that they are still going to determine, right? So then they explain who are the fund managers, the people that will be managing this ETF on behalf of the investors. That's some information that you can find there. We'll cover the investment objective. We'll actually go through the fact sheet of the underlying fund so that you understand what Satrix is trying to achieve. But at the surface, Satrix will be taking your money and investing it in another underlying fund. We'll cover that. It's offered by iShares. iShares is owned by Blackrock. Then if you go through this link, that is where you're going to find the information about the underlying ETF. That ETF exists. It has been trading since 2016. We can see the performance of that ETF. We'll also go through the chart at some point of this video. Like I mentioned, it is under Blackrock. Blackrock has an asset under management of about 7.4 trillion. We know that there are a lot of things that people are saying with regards to Blackrock being one of the biggest fund managers in the world there. Okay, so like I said, once again, there's some information that you can go through, general piece of information. There isn't much that is worth covering from this general thing, but what you need to understand, because I understand that there are people that invest because they want to receive dividend. This innovation ETF is going to be a total return fund. What does that mean? It means that the income of the portfolio will be reinvested, and then it will be used to purchase more units from the feeder fund on behalf of the investors, meaning that there won't be distribution. Whenever the feeder fund, if it pays distributions, that money is going to be used to reinvest. But in this case, the feeder fund itself, which is that iShare that is owned by Blackrock, it does not distribute. So do not expect to receive distributions from this ETF. The distributions are never coming. It's something that you have to keep in mind when you invest in here. Okay, and then the financial statement, you can see that they'll be made within 3 months after the first financial year end, which is going to be the 31st of December 2022. So from this, we can assume that the financial year end of this ETF is going to be the 31st December of each year, All right. The financial year end for this ETF is going to be the 31st of December each year. Then from there, you can expect to get the annual financial statement, which covers how the fund manager has been spending money and the money in that ETF. Okay. So now when you go there, they also give a summary of the offering. What the name of the ETF is, the Satrix Healthcare Innovation ETF, and then it is registered with the it's a Satrix Collective Investment Scheme. It is registered in the JSE. The share code is going to be STXX HLT. So it's Satrix Healthcare. Then you can see there, that's the name, but the long name is Satrix Healthcare Innovation ETF, right? We mentioned that this ETF is going to be tracking another fund, which is called the iShares Healthcare Innovation ETF, and there's the fund that the underlying fund that it will be tracking. Then the index for that is going to be provided by the STOXX Global Breakthrough Index Healthcare Index. There is a bit of explanation for this, what happens here, but to make things a bit simpler, we're just gonna only focus on the underlying fund, right? We assume that Satrix is going to get the right index just from that underlying fund. Okay, so now if we see here that most of the things, right, this is where they mentioned that the underlying fund reinvest the income from the constituents, meaning that it does not distribute. So the underlying fund itself does not distribute. Therefore, we cannot expect a Satrix ETF to make contributions, because they won't be receiving any contributions from the underlying fund, which is that iShares Healthcare Innovation ETF that they will be tracking there. Then we can see that the thing that attracted my attention, we always want to look at the fees that are associated with the investment that we are making. In this case, we can see that on Annexure C and D, that is where we are going to find information that is related to fees and expenses. But also when you go to E and F, then that is where we are going to expect to find information about the composition of the index there. So that information is relevant, because it is going to help us to understand where the money, or the investors' money, is going to be invested. Okay, so now if you go to the Annexure C, which explains what is happening in terms of fees, this is where this is where we need to pay attention, because then we are going to understand what is happening. So from this we can see that the management is going to be charging a 0.2% TR, not 20%. It's just a 0.2 there. Let's see, I want to make sure that my highlighter is big. Right, so we can see that they are going to be charging 20 basis point, which is 0.2% of the market value of the total asset in that portfolio, right? That money is going to be the market value of that total portfolio, but this will exclude income accrual and permissible deduction, such as trading cost and other fees that are associated with this investing. And also on top of that, the fund manager can also charge any lower amount nominated at the manager's discretion. So they are going to charge you that 0.2%, but if they feel like they want to charge you more, they can do that, but it's going to be lower than this 0.2%. But keep in mind that it includes a waiver that the manager can also decide to cancel those service fee, either all or part of those fees. So that is something that you have to keep in mind. But the most important thing that you need to remember is that you are going to be charged 0.2% for investing in this fund. Okay, so now that we know what is going to happen, in case the fund manager decides to change those fees, the investors will be notified within 3 months. That is going to be a written notice, and then those amendments will be represented in the fund fact sheet. So that is to make sure that you understand. But note that the current maximum fee as of the date is 0.2%. So at least in the short term, we do not expect Satrix to charge investors more than 0.2%. So that is something that you have to keep in mind. I know that most investors, they do focus a lot on the fees that they're going to pay, because if you don't focus on the fees, remember the fees that they start to eat in your investment. If the fees are high, it means that the fund fund manager is taking more money from your investment. Okay, so let's see what other information that I wanted to share with you. All right, so these are just the expenses that they've already covered. As you can see, the JSE documentation fee alone, it's about 91,000 rand, and then also the annual listing fee that is payable in February, meaning that once this ETF is listed in the JSE, the fund manager will be deducting about 0.1% value of the value of the ETF, then paying for those listing fee up to a maximum of 475,000. So depending on how many investors they invest in this ETF, and also on the net asset value of that ETF, then we can see what is the market cap of that ETF. Then JSE charges these companies 0.01%. Okay, so those are the expenses. Then here you can see that there are the composition of the underlying fund. So one thing that you need to pay attention is that the number of underlying funds per Satrix basket of 100,000 unit. Then they explain what does that 100,000 Satrix unit means. So 100,000 Satrix securities are equal to 50,000 iShares Healthcare Innovation ETF, right? So it's a 2 times exposure based on this. So they just double that. So every 100,000 share that they are holding, that equates to about 500,000 iShares Healthcare Innovation ETF from iShares. Then here you can see the companies in that underlying portfolio. It's different companies. Remember, it tracks companies that are in the healthcare sector. So we can expect to find companies that are involved in the healthcare sector, whether it's pharmaceutical companies or it's companies that are producing equipment for the healthcare sector. For example, we know that F.I.R.E. it's a pharmaceutical company, but Thermo Fisher, it's a company that produces instruments. The instruments are either used for research and development, or they are used in some other healthcare things there. Then you can see it's a different kinds of holdings there, but the main holding in this case is F.I.R.E., which is about 1.68%, and then we've got different ones. There is Roche Holding, which is a pharmaceutical company. There is a Mittler Toledo, which sells a different lab equipment from mass balances to TGAs, which are thermogravimetric analyzers. So I don't know all these companies. I know the ones that I'm familiar with. Bio-Rad, it produces stuff that is used in the laboratory. It could be cells, it could be electrophoresis equipment, it could be data analysis equipment. There it's all different. There's Waters Corporation sells instrument. Yeah, so I'm familiar with these names because of the type of work that I'm doing when I'm not making YouTube videos. But you can go through all these different holdings there, then you will see where your money is going to be invested. It's a whole lot of companies, and then you can see that there's a bit of cash that they are keeping there in different denominations. There's Danish krone, there's Hong Kong dollar, there's euro, there's Norwegian krone, there's Australian dollar, British pound there in there as well. So it's different kinds of currencies that they will be holding. But if you look at the percentages of these cash holdings, they are insignificant, right? Like I said, they are tracking this index. We can see the index, it dates back to September 2016. It's been nice on an uptrend, but today we are not discussing the performance of that index. We are just covering sharing information with regards to this. So now if you go to the Blackrock's website, then you can just Google this iShares Healthcare Innovation ETF. It takes you to this. Then you can see the net asset value as of May 2022. It's somewhere around $6.76. It's priced in US dollars. Then the change, that is yesterday's price, it's about it changed about 2.66%, but year to date it's down by minus 30%, right? Then they talk about why you should consider investing in this healthcare ETF. They say that it provides competitively priced and diversified access to companies across the world. These companies are focused on innovation within the global healthcare services across both developed and emerging markets there. And then they tell you that there's a growth potential due to the structural changes that are happening, including shifting global demographics, social changes, and increase in application of technology, right? Remember, these days ESG is the selling point. That is why they have that ESG there, but it excludes some of those companies there. So there's a lot of information that you can get from iShare website. So the investment objective is to track the performance of the index that is composed of a developed and emerging market, which are generating significant revenue from specific sectors that are focused on pushing the boundaries of medical treatment and technology. Well, that's a mouthful. You still have time to go through this information on your own and then make an informed decision. So what do we find here? The performance, I wouldn't dwell much on the performance of the ETF. It's still an IPO for for investors that will be buying this ETF either on the Satrix platform or on equities. But here you can see that the performance since that inception, which was somewhere around 2016. So the data that they have is from 2017 going all the way to 2018, but they have it in kinds of a segment. If you look at the annualized performance there, we can see since inception the total return is about 6.84%. Over 1 year, the portfolio we mentioned that it's down minus 30%. But over 3-year period it had a positive 5%, and then over 5-year period it's about 7.6%. So there have been good years and bad years that have been happening there. And then we look at the cumulative return, which covers since inception. Then we can see that the portfolio is actually up by 45%. So that is a bit encouraging. But it's you who's going to make the decision at the end of the day. So some key facts about this underlying fund: it has been in the market since September 2016. There we can see the market cap, it's about 1.3 billion. It's priced in US dollars. It's an equity ETF. We've already mentioned that they are tracking specific companies there. We can see the benchmark that they are tracking, which is the Global Breakthrough Healthcare Index. And then this underlying fund has a total expense ratio of 0.4%. Remember, Satrix is going to be charging you 0.2%. So let's say, for example, you have the fund, the total value of the fund in South Africa, the Satrix one, is 10 billion. Then iShares is going to be charging Signia. Okay, it's not Signia, it's Satrix. Blackrock is going to be charging Satrix 0.4% of that 10 billion, but the fees are already covered there. If you remember that presentation, in terms of the fees that they will be charging there, some fees will already be deducted. Then from that 10 billion that you guys will be invested in, Satrix is going to take a 0.2% there. So you're going to have to make your own decision. How do you feel about investing in a fund of fund? Because in this case, this is a feeder fund. That is what we meant when we said that it's a feeder fund. It means that it is investing in another fund. Okay. And then the product structure, they say it's physical, right? I don't know what this means. So they say that the product structure indicates whether the holding is physical securities, in this case it's shares, or it's tracking the index performance using derivatives such as swaps or synthetics. In this case, it holding the shares. That is why they call it physical. In terms of methodology, when they say it's optimized, optimization means a lot of things these days, but you can see that what they define as optimization there. We're not going to dwell on that. So like we mentioned, that the net asset value of the fund, it's about 1.3 billion. Yes, that is billion. Okay, it is priced in US dollars. And then there is something that I wanted to cover here. Okay, so it's domiciled in Ireland, and then it is rebalanced annual. So there is less. It's a passively managed ETF. That is why maybe it has a low total expense ratio. I know that there are ETF that have a total expense ratio that is less than 0.1%, or that is less than 0.4%. Let me put it like that. But it's still passively managed, and then the fund manager is Blackrock Asset Management, the Ireland part of that. Blackrock. Then when we look at the portfolio characteristics, we see that it has 190 holdings. Remember, when we went through this, we see that it has a lot of holdings underneath there. Then here they give a number, they have about 190 holdings there. And then there are other things that you can look at. Price to earning ratio, I know that it means something to other people. To me, it doesn't mean much. Whether the PE ratio is up or high, it doesn't really mean a lot of things. For those people that are excited about ESG, you can already see that the ESG fund rating is at 1. So if that is something that excites you, then great, you can see that it is 1 there. So like, remember, they said that they want to exclude some businesses. So there are no businesses such as controversial weapons, nuclear weapons, civilian firearms, and everything that you can see there. And then it is registered in different countries. In this case, they will be tracking the one that is listed in the United Kingdom, but you can see that it is also listed in other different companies. Then when you look at the top 10 companies of this fund, remember we mentioned that there is F.I.R.E, then there are a whole lot of other companies there like Thermo Fisher and Abbott Laboratories. So they all have different weightings in them. Then you can find the list of all these 190 holdings there. Then when you look at the exposure breakdown of this ETF, remember it is tracking the healthcare sector. That is why it has over 98% of the fund is in the healthcare sector, but it also has some bit of cash in different currencies. That is why it's sitting at 0.41% there, right? Then they mentioned that there's a bit of IT. Remember, some of these companies, they need a software for the instrument or for whatever purposes that they use. Okay, so now we're not going to cover the securities lending. It's a bit of a complicated topic. Then we can see that it is listed at different exchanges like Mexico, Italy, Amsterdam, and London, and other exchanges around the world. So that's just about it here about this ETF. And then you can find, if you just click there on the fact sheet, then you can be able to download the fact sheet from iShares. Again, the key fact, you can see that it is priced in US dollars. It was established in September 2016, and then we can see the benchmark there. They are tracking the total expense ratio, which we have already covered, of 0.4%. And then we can see that the rebalancing frequency is annually. There's a place where I'm looking for distribution. Okay, here's distribution type, it's none. Remember, they reinvest that money there. It's a total return fund, so don't expect to receive money from this ETF. If you buy it, what you're going to get is the capital growth. Whatever money that you invested, you can expect it to grow. As you can see from this, it started there. Here they give you an example. If you had invested 10,000 US dollars in this fund, your value would be somewhere just above 15,000 rand. Remember, we mentioned that the cumulative return is just around 45%. That you see. So the top 10 holdings there are also specified. Again, the top 10 holding percentage, they make about 13% or 14% of that fund. Different years, some years have been nicely profitable. The fund has been positive, but for 2018 and 2021 the fund was negative, but it's just below 10% there, where we see other years like in 2020 it was up by over 50%. And then by geographic location, the fund is mostly invested in the US, then there's a bit of piece in Asia, and then the remainder is in Europe. There you can see where it is. So that is all the information that you can find from this. But remember that the date that you have to remember, you need to make sure that by 16, which is Monday of 2022, 16 May 2022, you need to have logged in into your stock brokerage account, and then you need to have bought those letter of allocation. Each letter of allocation, it cost 1 rand. Once they have consolidated everything and they started buying the underlying fund, then that is when they are going to determine the net asset value, which is going to determine the number of units that you are going to get. Then from the 26th of May 2022, this ETF is going to be trading in the JSE. Then you can just buy it, even though if you will have missed the IPO period. The benefit of investing in the IPO is that you won't be paying brokerage fees. So that's all. We're not going to cover the chart today. We're just introducing the ETF. So if you found this video useful, please consider subscribing if you haven't subscribed, and make sure that you smash that like button, and feel free to share this video anywhere in any social media platform, just click the share button below there. If you have any questions, comment, suggestion, or even complaints, you can just write them there in the comment section. We try by all means to respond to all the comments that we're receiving. That's it for today. I will see you in the next video.